Welcome to Cyprus Tax Life. I'm your host, and today we're tackling one of the most searched questions about Cyprus. Is it a tax haven? Search this online, and you'll find confident answers on both sides. Some websites call it a backdoor to zero taxes. Others insist it's a fully compliant EU member state with nothing to hide. The truth is more nuanced than either side admits. So let's look at the actual numbers and the legal framework, and you can decide for yourself. First, what makes a tax haven? The OECD and EU use several criteria: zero or near zero tax rates with no real economic substance requirements, lack of transparency and information exchange, secrecy laws that prevent oversight, and artificial arrangements that serve no real economic purpose. Classic tax havens include the Cayman Islands, British Virgin Islands, Bermuda, and Jersey. These jurisdictions charge zero corporate tax, have minimal reporting requirements, and historically resisted sharing financial information with other countries. Now let's see how Cyprus compares. Cyprus has a corporate tax rate of 15%. This is low by European standards. France charges 25%, Germany around 30% with trade tax. But 15% is not zero. It's not even close to zero. Here's the full picture. Corporate tax, 15% on worldwide profits. Personal income tax, progressive rates from 0 to 35%. VAT, 19%. Capital gains tax, 0% on securities like shares and bonds. Dividend tax, 0% for non-dom residents with a 2.65% healthcare contribution. Social insurance contributions, yes, mandatory. A country with 15% corporate tax, 19% VAT, and progressive income tax up to 35% does not fit any reasonable definition of a tax haven. It's a low-tax jurisdiction within the EU, which is a very different thing. And here's the most important point that tax haven claims ignore. Cyprus is a full member of the European Union. It joined in 2004. That means Cyprus follows all EU tax directives, including the anti-tax avoidance directives. It participates in the Common Reporting Standard, automatically exchanging financial account information with over 100 countries. It complies with OECD guidelines on base erosion and profit shifting. It is not on any EU blacklist or gray list. It has signed over 65 double tax treaties, and it implements beneficial ownership registers. Compare this to the Cayman Islands, which has no direct taxation, no automatic information exchange for domestic entities, and limited transparency. The difference is fundamental. Now, the non-dom regime. This is probably the biggest reason people associate Cyprus with tax haven claims. Under non-dom status, residents who are not domiciled in Cyprus are exempt from the special defense contribution on dividends, interest, and foreign rental income. This sounds aggressive, but context matters. The non-dom concept originated in the UK over 200 years ago. Ireland, Malta, and other EU countries have similar frameworks. The UK only abolished its own regime in 2025 after decades of use. Cyprus non-dom is publicly documented, available to anyone who qualifies, and fully reported to EU institutions. There's nothing hidden about it. So why does the misconception exist? Several reasons. The 15% corporate tax rate stands out in Europe. The non-dom regime sounds too good to be true if you don't understand the details. Cyprus had a reputation problem in the early 2000s before EU accession tightened everything up. And frankly, clickbait headlines about tax havens get more clicks than nuanced explanations. So, what's the verdict? Cyprus is not a tax haven. It's a low-tax, EU-compliant jurisdiction that offers legitimate tax planning opportunities within a fully transparent regulatory framework. There's a huge difference between a tax haven and a country with competitive tax rates. Cyprus falls firmly in the second category. For the full breakdown with numbers, comparisons, and legal references, head over to cyprustaxlife.com. Thanks for listening to Cyprus Tax Life. In the next episode, we're going head-to-head, Cyprus versus Dubai, the real cost of zero tax. See you then.